It's a question that I'm getting asked very frequently these days, and that is from the standpoint of the global monetary system, the global payment system. What are the implications of this weaponization of finance in the context of the Russia Ukraine war? Last month, we talked about the way that we are seeing finance used in the context of the Russia Ukraine war. And essentially, this idea of the weaponization of finance and the way that the digitization of finance and its infrastructure connects all of our countries, all of our global economies, and how this has been a means not only of communication, but as we saw in the context of COVID, a mechanism of economic activity and state support. And of course, now in the context of the Russia Ukraine war, a situation where finance is also being used as a tool, a geopolitical tool, and certainly something that we spoke about over the past several years is this idea of digital currencies. And I think that it's a question that I'm getting asked very frequently these days. And that is from the standpoint of the global monetary system, the global payment system. What are the implications of this weaponization of finance in the context of the Russia Ukraine war? And I think the first, I think it has been surprising to many, if not most, just how powerful of a tool the mechanism of excluding companies and individuals from the international payment system can be from the standpoint of economic and financial impact. But certainly something that this also does is it raises questions. In other words, at what stage should countries become concerned about their possible risks or vulnerabilities as a result of the political use of the international and monetary and payment system? And I think when we think about the international monetary and payment system, the first is to realize that we have a system that is based on what we call fiat currencies. These are monetary instruments whose value comes only from the states which issue them and from the central banks which set their policy frameworks and from the markets in which we, you and I, and others use those. That's the idea of a fiat currency. And I think what the Ukraine crisis has shown is that when we talk about modern monetary instruments, that we are talking about digital money, digital currencies, and that because of the centrality of digitization, there are issues, there are risks about failures or about conflicts in the context of these systems. When we think about the international monetary system, throughout history over the past several thousand years, at each point in time, there has generally been some form of dominant monetary instrument. And over the past 50, 60 years since the aftermath of the Second World War, at first it was gold linked to the US dollar. And from the early 1970s, it has been the US dollar largely as what we would call a reserve currency, a currency which is held by central banks all across the world to support cross-border payments as well as the value of their own currency. And what we've seen is that those reserve currencies, those dominant monetary instruments, they come from a variety of reasons. But one reason is because they hold their value and they are widely accepted and used. There is a certain convenience associated with the currency. And that is something that if we think about digital payments, it is in support of that dollar-based system. It makes it easier to use a single currency for many transactions. And I think that's something that the current conflict is highlighting, is that many countries are going to be thinking about the place of their monetary instruments, their financial systems, their economies in the global system. And probably the starting point is going to make sure that they have a resilient and functional domestic payment system for their own currency that will work regardless of what happens to the international system. If there is a cybersecurity problem, if there's a natural disaster, if there's a political conflict, a country should have in place a system that will work in its own economy. The second is thinking about how they might be able to use their own currency from the standpoint of cross-border transactions. But the reality is, only a small number of countries are likely to be able to use their currencies from the standpoint of cross-border transactions. Why? Because there are a small number of countries who their economies dominate transactions, whether those are trade in goods or trade in services, or finance monetary and capital transactions. And as a result, those are the currencies that are most likely to be used because they are most useful for the various participants in the system. And I think as we think about digitization, there's a very real possibility that the advent of central bank digital currencies, the development of decentralized systems, may allow the development of a multi-currency system whereby a larger number of currencies can be used with convenience, efficiency, and trust in the international monetary system. And I think as we look forward, one of the implications of both the Ukraine crisis and the weaponization of finance, which we have seen used so effectively in it, is going to be an increasing multipolarity of the international monetary system on the basis of technology and the convenience that it provides in allowing the use of a small number of major monetary instruments. What I don't see is either the end of the US dollar as a major currency, nor its replacement by a single new dominant monetary instrument. Rather, I think the future in international monetary affairs, in digital payments, as in geopolitics, is likely to be one of increasing multipolarity.